Welcome back to Sunrise. Good morning to you if you're just joining us. This morning we dive into the currency Q&A edition of Money Masterclass. Sir Carlton, over to you. Good morning.
Good morning, students. How are you doing both this morning?
Good, thank you.
Dennis, welcome back to class. Just call the class for the last week or so, Dennis.
Boy, I had to take leave.
You have to take leave from class. Send in your notice next time, Dennis. But good to have you back here. Good morning. Good to have you back.
Good morning, Prof.
I wasn't here for a day, but we're here this morning.
Yeah.
So we have currency Q&A this morning, and it's a segment in Money Masterclass where we're hearing from our external students, those who are online. Remember, classes in person and we have our online students.
Yes.
So they have sent in their questions and we want to answer the question and then to jump into the segment. But before I do that, a young lady, I met her yesterday with her parent and she's like, "Hi, Mr. Carlton, I'm your biggest fan." I'm like, "Fan? Are you a standing fan?" What is a fan? How do I have a fan? Her name is Zalika Logan. She attends the Arden High School.
All right.
I want to shout her out this morning. She
Morning,
watches
Miss Logan.
the program in the mornings, going to school, etc. before she goes out. And I want to big her up this morning.
Big up.
If we have so many young persons tuning in, I'm sure that we will not have the challenge another 10 years from now or 20 years from now.
Yes.
Because they are tuning in to financial literacy stuff. So the question this morning comes from one of my viewers from TikTok. They are so engaged over there on TikTok.
Right.
And the question is, my microfinance company rates are just too high. Am I being scammed? That's the question that's posed to me. Carlton, I feel like I'm being scammed. Talk to me about the MFIs and the interest rates. So let's jump into that before I answer the question. If you are being scammed, let's run through to find out why you think that you are being scammed.
All right.
So what's an MFI, if you've never heard about the term?
Yeah.
It's really a microfinance institution. And what is that though? It's a company that provides small or micro loans to people who sometimes necessarily aren't able to get financing or funding from the traditional bank or financial institutions, your credit unions, etc., your building societies. So generally, those persons aren't able to get those banking products. So these companies were built just to serve the underbanked or the unbanked persons to provide them with financial solutions. Over the years, that has been changing because you find that you have persons who can get a loan from the bank who still chooses to go and get a loan from your microfinance institution.
It's also typically faster, right?
And that's one of the benefits that we'll get into. It's a little bit faster and sometimes a little bit more flexible because of what they're looking for. Remember, we went through the 5 stages of credit the previous couple of weeks before. Sometimes that is not the case at your microfinance company.
Right.
So, but they serve a purpose. As I mentioned earlier, they serve the underbanked. They serve the unbanked persons who cannot get maybe a loan from the traditional banking institutions. They more likely empower the smaller businesses. Your peanut cart man want a small loan, they can get that. Your fruit vendor want a little loan, they can get that to push the business, move the business along. So your MFI sometimes benefits the smaller businesses. Also, they give small loans. A $20,000 loan. When I was a part of the sector, I worked in the microfinance sector for a few years. I ran a company in that sector. When I joined the sector, because I was in the formal banking for maybe 15, 17 years before that, and a person are borrowing $10,000, $20,000. I'm like, why do you need a loan for $20,000? But there is a need, there's a gap in the market that maybe the bigger banks do not want to get into that space sometimes, and you fill that gap.
Yeah.
So you're borrowing a loan for $20,000, really.
But the thing is, though, with these MFIs, is that typically when you take the loan from them, you do get a higher interest rate, correct?
Which is what we're jumping over to, which is the rate is the challenge.
Right.
So the interest rate from your MFIs are generally much higher.
Yeah.
In banking now, you're looking at about 17 to 24% as an interest rate. No, just because there's been recent rate hikes over the last subsequent quarters. Before, not about 15% and below. In your MFI space, rates are north of 24%. 28%, 29%, 40%, 42%,
that's like a credit card rate.
47%. That is the interest rate that spans the MFI space. No, if you do any checks there. But you
So
may
you borrow
ask why.
$100, you're paying back
400, you're paying back a lot. Yeah? But you may ask, why are they charging so much? But bear in mind that when
take the greater risk.
Their greater risk, number one, and their cost of funds is much more expensive. You may ask, what is their cost of funds really? But when a bank unlends to you, Yendi, or unlends to you, Dennis, there is in other depositors' money. So when I put my money in the bank, they are paying me maybe 1%, 2%, for example. So they have a cheaper cost of funds. So I can lend that maybe 10% and still make a nice spread or profit. For an MFI, though, you are borrowing from somewhere else to lend. So they may borrow at 10%, for example, or at 15%. They need a greater spread so that they can make a profit. So you may ask, what's the drawback? Obviously, the drawback is that the interest rate is much higher, so it's much more expensive on you, the consumer. So if you borrow $1 million, for example, at your bank, you may pay $30,000. At your MFI, you may pay $45,000 because the rates are much higher. You may also realize that people who borrow from the MFI sometimes are more indebted. They have multiple loans because the banks may use a much more stricter model to unlend your debt service ratio, for example, at 45, all of that. For your MFIs, they may not, 60%. So you find that you have much more loans or you're much more leveraged in debt because of that. But how are you protected? The quick one is that review documents. Stop borrowing and not reading. That's a challenge that we're having. Just sign your stuff. And that's a challenge for you. Shop around. It's okay to shop around. Sometimes because you are in a hurry to get the money and you know you're being pressured, you don't sign away without shopping around. Please shop around. Also, the Microcredit Act does not restrict the MFIs from charging the rate. What they say, ensure that you are getting plain information. As a lender, ensure that you are doing that. And the Consumer Affairs Commission is the body in place to take your complaints. So are you being scammed? I won't say that you are scammed because you are able to read ahead, know the rate, know the fees and charges before you sign on that dotted line. You know where to find me to pose your other questions so we can get down to the nitty-gritty of this thing and to make better financial decisions. It's Carlton G Stew across all platforms. Please comment, and share. Have a good one, everybody.
Look here. Some of you need to be very careful of some of these microfinance institutions. Leave it alone.
And
if you don't know where you're going to, leave it alone. Take the foolish advice.
Please and thanks.
Yes.
This is the teacher.
All right.
All right, after the break, we'll be homing it with NHT. Please stick and stay.